What happens if your paycheck stops tomorrow? Not next year, not when you retire, tomorrow. Would your family still be able to pay the mortgage, keep food on the table, cover childcare expenses, pay off debt, and maintain the lifestyle you've worked so hard to build? Most families don't face financial hardship because they failed to work hard. They face financial hardship because one income suddenly disappeared and there was no plan in place to replace it. Today, I'm going to show you a simple family income protection plan that can help protect the people you love most. And stay with me until the end because I'll share the biggest mistake families make when planning for financial security. So, let's get started. When most people hear the words life insurance, they immediately think about death, but protecting family income is much bigger than that. The real issue is replacing income when life doesn't go according to plan. Think about it. Your paycheck pays for mortgage, rent, utilities, groceries, car payments, childcare, and credit card debt. In other words, your income is the engine that keeps your family's financial life moving. If that engine suddenly stops, everything else becomes much harder. That's why protecting income should be one of the most important parts of any financial plan. Now that we understand what's really at risk, let's talk about how to measure it. Before you can protect income, you need to know how much income you're protecting. I call this your family survival number. This is the amount of money your family needs every month to cover the essentials. Now, don't get cute on me. This is not money for vacations, expensive purchases, or things you want. It's about the necessities of life. For example, take a few minutes and add up housing costs, utilities, food, transportation, insurance, debt payments, childcare, and any other essential monthly expenses. Once you know that number, you have a clear target. The goal is you're no longer guessing, you're planning. And with planning, confidence is created. Because once you know the number, the next step is making sure there's a way to replace it. One of the simplest ways to protect family income is through life insurance. Yes, our good buddy life insurance, which creates a financial safety net for the people who depend on you. Think about it. If something happens to you, the death benefit can help replace lost income and give your family time to adjust. For some families, that means paying off the mortgage. For others, it means replacing several years of income. And for many families, it means ensuring children can continue their education and maintain stability during a difficult time. The goal isn't simply to leave money behind. The goal is to preserve options and provide financial security when your family needs it most. The whole point of purchasing life insurance is to create peace of mind today, not just protection for tomorrow. But we're not finished. There's another risk that often gets overlooked, and that is disability income insurance. Here's why this insurance matters. Statistically, you're more likely to become disabled during your working years than to die prematurely. Think about that from this aspect. What happens if you're alive but unable to work because of an illness or injury? Guess what? Your family still needs income. The bills don't stop, and the mortgage company still expects payment. See, life insurance is designed to fully solve that problem. That's where disability income insurance comes in. It can help replace a portion of your income when you're unable to work. That's why protecting your paycheck while you're living can be just as important as protecting your family after you're gone. This is one of the most overlooked areas of financial planning. Let me show you what this looks like in the real world. A husband and wife had 2 children and a mortgage. Like many families, they were busy with work, school activities, family commitments, simply living life. However, they knew they needed to review their life insurance and financial protection plan, but they kept putting it off. Then the husband experienced a major health issue. Thankfully, he survived. But here's the kicker. He couldn't work for several months. Suddenly, the family faced a challenge they never expected. The issue wasn't death. Guess what? The issue was income interruption. That experience changed how they viewed financial planning. They realized protecting income means planning for multiple scenarios, not just one. And that's a lesson every family can benefit from. So what should you do today? Here's a simple action plan you can start right now. Step 1, calculate your monthly survival number. Know exactly how much income your family needs. Step 2, review your current life insurance coverage. Determine whether it's sufficient to protect your family's financial future. Step 3, review any employer-provided life insurance. Many people discover they have less protection than they thought. Step 4, evaluate disability income protection. Ask yourself, if I couldn't work for 6 months, what would happen financially? Step 5, review your beneficiaries. Make sure they are accurate and up to date. Step 6, review your plan annually because life changes, especially if you just got married, have children, or just had a child recently. And don't forget about a new home, career change, or if you started a business. See, your protection plan should change right in line with your life events. In the end, protecting family income doesn't have to be complicated. In fact, the best plans are often the simplest. Here's what you need to do. Know your numbers, protect your income, review your coverage, and update your plan as life changes. Because financial security isn't about predicting the future, it's about preparing for it. When the unexpected happens, your family shouldn't have to worry about how the bills will be paid. They should have a plan. Make sure that plan starts today. Now, if this content was helpful, place a thumbs up in the comment section. This really helps with engagement and assists with pushing out this video to others. Also, word of mouth is good too. So please share this content with someone who may benefit from this topic. Then check out my video library. I have information on home, auto, business, specialty insurance, and retirement. With all this being said, subscribe to my channel and help me get to 1,000 subscribers. But don't stop here. Check out my next video on your left for more insurance and financial tips. And as I like to say, call Jay today.